Hello, I'm Roger James. I'm Chairman of the Australian Marketing Institute. And in that role, I frequently meet people who are learning to become marketers, people who are students, who are interested in marketing and becoming the best marketers they can. They ask me what it is that I think is important that they take away from their degree before they become marketers. My answer really is quite simple. Over the past decade, marketing has become more and more accountable. It's a long-term trend and it's not going to stop in the near future. Greater accountability means that we need to measure what we do to demonstrate that we add value in everything that marketing does. Now, you and I, as budding marketers or aging marketers, we all know that marketing is the source of value. But to demonstrate that value requires marketing metrics and measurements. The AMI over the past 5 years has undertaken a project on marketing metrics, and out of that has come some material that is on our website and some tools and some templates. But one of the things that comes out of it is the need to understand what marketing does in terms of dollars return. Now, if you're just simply measuring the result of a sales campaign, you'll need to know perhaps the number of units that you sold, the amount of dollars that you took in, and hopefully the profit margin you achieved for that. But when you get to projecting marketing performance, you need to think about tools which are not strictly in the accounting area, but in the finance area. In accounting, of course, you'll learn about profit and loss and balance sheet, and these are important tools for you to have in assessing the progress of your marketing. But if you're trying to deal with the most important assets that marketers deal with, intangible assets like brands, then you'll need to be able to at least understand the basics of finance. Why do I say this? Well, for example, let's take brands. If you want to work out what the value of a brand is, the usual way is to project the added value that it provides over a period of time for the life of the brand. And so you take the earnings that you expect from the brand this year and next year and so on for a period that you set. But to assess the impact of those earnings, you'll need to allow for the fact that things like inflation will reduce the value of the dollars that come in next year and the year after. And to do that, you'll need to do what's called a discounted cash flow. That's quite a simple technique, but it's a basic technique of finance. Another aspect of intangible assets that require a basic understanding of finance is things like the concept of net present value, so that you can look at the assets at the end of a term and see what their particular value, their net present value will be through the tools of finance. Now, I know a lot of marketing students who say to me, look, I'm interested in the good stuff. I'm interested in learning about brands, about brand management, about customers and all of those sorts of things. But I do reply to them, if you really want to be the best marketer you can be, you need to at least get some of these basics of finance. Now, when I say that, I don't say that you have to be able to conduct all the financial analysis yourself, because when you're in a job, there'll be people from finance who can assist you. You'll still need to understand what a DCF is and what NPV means. And in terms like return on marketing investment, which also require financial analysis. Another aspect of having some understanding of finance is the way that marketing in its best forms today is spreading across the whole company. A thing that I call marketing orientation, which I distinguish from the marketing function. Marketing orientation means that people from finance, people from production, people from logistics can all be part of the brand management team. And again, as a competent marketer, a little finance won't do you any harm. Thank you very much for your time.